Tamikaze here with a video on short squeezes. Wanted to make this because I've been getting a lot of questions on it lately, so this should help you understand what goes into a short squeeze, what you should look for, how you know it's squeezing, and then kind of what to look for to know the squeeze is over. So, um, I'm going to be talking about what I personally look for and what has worked for me. Now, there are some things I won't be talking about that other people will talk about, but I wanted to make it as simple as possible to understand, and hopefully this will help you kind of understand a short squeeze in a little bit more detail. So, what do I look for? Primarily three things, and this is what I talk about all the time. This is why you see me mention them all the time when I'm talking about a short squeeze. The first thing is the short interest. So, the short interest is the number of shares that have been covered or closed out. Short interest can be expressed as a number of percentage. It's usually an indicator of market sentiment or sentiment of that stock. Sometimes short interest can be overly pessimistic, and when that's the case, we have a chance to catch them in a short squeeze. And so it is fundamentally imperative that there has to be a high short percentage, or at least a decent short percentage, if you were looking to have a short squeeze happen. Typically, I look for 30% and up, but there are certain cases where that 10 to 20% will cause a good short squeeze as well, and I will get into that. So now that we have the groundwork for a short squeeze, knowing that you have to have good short interest, what are some other metrics that we look for? So one of the big ones I look for is cost to borrow. So I usually abbreviate the CTB, cost to borrow. This is the annualized interest rate um, for people that are shorting a stock. So the longer they hold it, they have to pay that interest rate. Think about it when you go to a bank and you go and you borrow money, right? They'll give you an interest rate that you'll pay over time to pay that back. So when you short a stock, you are getting loaned a share of that stock, which you then sell for money, but eventually you have to buy that share and give it back. The longer you hold that share and don't give it back, the higher the interest rate that they will charge you. This is the cost to borrow. So typically, I like to see high cost to borrows in the 100, 200, 300% that will tell me that it is becoming too expensive for someone to hold those short shares and they will want to return them, which means we could potentially get a short squeeze. Now, you'll see people talking about highly shorted stocks that typically, like Workhorse or something, but the cost to borrow is only like 1%, 2%. Basically, someone could hold that short forever until it goes down. There's no real reason that would drive them to cover their shorts, which is why the cost to borrow is important. Because if there's no motivation for them to return their short shares, there's no motivation for there to be a short squeeze. So this one is big. Also, another thing we want to look at is utilization. So if the stock price is going up and there's a whole bunch of shares that could continue to be shorted, they can then short it more to continue to drive the price down. But utilization is the number of shares available to short, not necessarily the number of shares that are part of the float, but the number of shares that people have in the share lending program that someone can then say, hey, I'm going to go short this stock with these shares. So if there's 100% utilization, that means someone can't drive the price down more by continually shorting it. So this is important because if there's no shares to short, they can't drive the price down. So as the price continues to go up, then they're losing more and more money because the cost to them buy back the share is higher and higher. So when you put all these things together, that's when you can get a good short squeeze. So how do you know a stock will be ready to short? So like for instance, on Zev here, you can see there was a short squeeze right here. This was based on news, but then the news extrapolated it and those shorts had to cover. News is hard to predict, but when you're looking at other things such as cost to borrow utilization, for example, those things are easier to predict. So with support.com, for instance, SPRT, we knew this was going to squeeze because the price continued to rise. The short interest was not going down, so that means they were not covering, and the cost to borrow continued to rise higher and higher and higher. And so as the price continued to rise and the cost to borrow continued to rise, it became more and more expensive for the people shorting it to hold that stock, and they were forced to cover, or they would have met with a margin call, and one way or the other they would have been forced to cover. So getting back to this, how do I know it's squeezing? By looking at these three numbers that we talked about, and then looking at price movement, you can tell that a stock is going to continue to squeeze. So as long as the short interest continues to go up, or at least maintain, and as long as the cost to borrow continues to go up and utilization remains near 100%, you can almost always count on a good short squeeze. Not always like to the support.com level, but you know, going up 10-20% is still really good. Now the $1 million question is, how do you know the squeeze is over? This one is one of the hardest ones to predict, because you can kind of do a whole bunch of math and figure out how many shares are on loan and how much that would drive the price. The reality of it is, it has more to do with price movement and support and resistances, as well as fib extensions. And honestly, when you see something like this just gap up like this, that typically means it's potentially over. You need to continually monitor the cost to borrow. You need to continually monitor the short interest to see if they're covering. Unfortunately, FINRA only updates the short interest twice a month. Otherwise, you have to use services like Ortex or SP3 that basically use their software to try to guess what the short interest is. And they do a decent job at it, but it's not 100% certain, because unless it's reported by the exchanges, you won't know for sure unless it's updated twice a month. And that's why typically the second and third weeks of the month is where you get the short squeezes, because that's where the shorts are covering, so that doesn't get reported. So keep that in mind. So again, hopefully this helped you understand a little bit about what goes into a short squeeze, and then how to know it's squeezing. And then the hardest one is how to know when the squeeze is over. Um, Typically, you just want to monitor price action, and you want to monitor short and resistance levels, and you want to monitor the cost to borrow and all those other things. So thank you. Hopefully this helped, and I hope you have a wonderful day.